Today, we're going to talk about SPACs, not spackle, SPACs. What are they and why is everyone talking about them? Even my wife asked if we own a SPAC, and she has never asked about my investment business. So, let's get right at it with another Straight Talk. Hello, this is Michael Loftus with Wealth and Wisdom TV, where education is the key to a successful financial future. First up, don't forget, if you like what you see, click that like button, subscribe, all those things, especially the like, as that will help us out. As always, a reminder, we are a practicing advisory firm. So what you hear here, we apply to our practice. So SPACs, a lot of talk about this recently. Tons of headlines. I'm showing just a few here. Why? Because it's kind of exploded recently. So, by definition, what is a SPAC? It is a special purchase acquisition company, which is essentially a blank check shell corporation. All right, now, their goal is to take companies public without going through the traditional IPO process, okay? It essentially allows individual investors to invest in private equity transactions. Think about it, IPOs. Even as an advisor, I don't get those opportunities. When you see something IPO and everyone's all excited on big TV because it goes up that first day, you and I miss out on this. This has the potential to give you that opportunity, okay? It is governed by the SEC because it is traded on the exchange, so that's good to know. Offerings start at $10 a share, so they raise capital, okay? Now, what's nice is you have the opportunity to redeem those shares, okay, for $10 plus interest at any time. Okay, now this is prior to an acquisition or if the SPAC fails to complete an acquisition within 10 years. Now here's the growth. Wow, right? Go back to 2014, there were 12 SPAC IPOs, 1.8 billion. Really took off at the second half of the year. Last year, 79 billion with over 237 companies utilizing this process. 2021, how about 3 or 4 a day? Hello. So, is this a good investment? Does it make sense for you, the individual investor, and our clients? So a couple things, right? First off, 85 to 100% of the proceeds raised in the SPAC is held in a trust to be used later for that acquisition, because that's what this is all about. Can this company put together and find some really good acquisitions, okay? It all has, meaning each SPAC has its own window of liquidation, okay, which it must complete through mergers or acquisitions, as I mentioned, within those first 2 years, or you will be forced to dissolve the SPAC, okay? The other thing is SPAC sponsors, sometimes they can extend that life by pumping in some of their own money, okay? So target acquisition here, fair market value, of course, all right, is equal to at least 80% of the SPAC's net assets at the time of acquisition. So, where do you invest? Well, pick a sector, because right now, there's all kinds, right? You've got Bitcoin SPACs, a lot of marijuana SPACs going out there right now, green energy, you name it, okay? On top of that, you got a lot of big names getting in there, Shaquille O'Neal, Jay-Z, etc., right, that are getting into the space for the opportunity. But like anything else, look at that sector and see what kind of growth potential. If you follow my videos, you know how I feel about marijuana, okay? Do your research, okay? Now, I'm fortunate. I pay for research. I am not going to get involved in one of these until I know exactly where they are. The other thing is, if you put in, sure, just $10 a share, but I don't really want it sitting there for 2 years, right? Because that becomes what I'll call dead money. I'm looking for a SPAC that's getting close on acquisitions and ready to go, and that comes through the research process. Next thing is, who's doing it? Like I said, what's the track record and what's the the reputation of the team? Really important. Have they been successful in this space? Timing. Now, I'm not talking about timing the market here, okay? But timing is everything, right? Because the SPAC does not have to announce an acquisition up to 2 years. Like I just said, do you want to sit in it for 2 years and have dead money? I would say no. So understanding when what they're doing as they get close is probably the best time to invest in this. Don't go big, okay? Generally I always look at about a 2% investment in something like this. If it grows, and some of them have had the potential to do so, you take those profits and then let it run, right? And always hedge your investments with something like this, because it is riskier than most individual investments. So, at this point, we have invested in some SPACs, and that's, again, has come from the research company that I utilize and pay good money for. So, but like I said, you got to be careful. A lot of volatility. Some of these, you think about Bitcoin and how it goes up and down, your SPAC's going to do the same thing. So you have to be very aware. Always take profits if you have a big run up. Make sure you understand what's going into this, what they're looking at going forward. And like any investment, if it has the potential for growth, it's probably a good investment. But in some cases, it's going to have more risk than other investments, which is why we tell you to be careful. Thanks for watching. Michael Loftus, Wealth and Wisdom TV, with another Straight Talk.